Preparing for a Con Edison FP&A Analyst interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why are you interested in an FP&A analyst role at Con Edison? I am interested because Con Edison combines rigorous financial analysis with a mission that directly affects customers and communities. In FP&A, I would enjoy translating operating drivers such as demand, weather, labor, maintenance, and capital spending into actionable forecasts. The regulated utility environment also requires discipline, transparency, and long-term thinking. My strengths in Excel, variance analysis, and cross-functional communication would help management understand performance and make sound investment decisions while supporting safe, reliable service. While answering, connect your analytical skills to Con Edison's essential service mission, regulated utility economics, infrastructure investment, and need for reliable budgeting, forecasting, and performance reporting. Question 2. What does FP&A do, and how would it support Con Edison's business? FP&A helps management plan resources, understand performance, and make better decisions. At Con Edison, that would include preparing annual budgets, updating forecasts, analyzing actual results against plan, and explaining drivers across operating and capital activities. I would partner with operations, engineering, procurement, and accounting rather than simply compile numbers. The strongest analysis connects dollars to measures such as customer demand, outage activity, headcount, project milestones, and weather, so leaders can act before results materially diverge. Make sure to cover budgeting, forecasting, variance analysis, management reporting, decision support, business partnering, and how FP&A links financial results to operational metrics across utility operations. Question 3. Walk me through how you would build an annual budget for a utility business. I would begin with validated historical actuals and identify the major revenue, O&M, labor, capital, and financing drivers. Next, I would gather assumptions from operating leaders, including demand, customer growth, wage increases, vendor pricing, project timing, and planned maintenance. I would build schedules by department, challenge unusual changes, and reconcile them to the general ledger and financial statements. Finally, I would document assumptions, run review meetings, incorporate feedback, and establish monthly variance thresholds for monitoring. In your answer, discuss historical baselines, operating assumptions, volume and rate drivers, labor and vendor costs, capital plans, business owner input, review cycles, and reconciliation to financial statements. Question 4. How would you forecast revenue for Con Edison? I would forecast revenue using a driver-based model rather than applying a simple growth rate. Key inputs would include customer counts, electricity and gas usage, weather assumptions, approved rate changes, service mix, and seasonality. I would separate price, volume, and mix impacts so management can understand what is changing. I would compare the forecast with recent trends and regulatory assumptions, then update it as actual usage, weather, or rate case outcomes differ from expectations. Be sure to mention customer counts, usage volumes, weather, rate structures, regulatory decisions, service mix, seasonality, historical relationships, and the importance of separating price, volume, and mix effects. Question 5. What is the difference between a budget, a forecast, and a long-range plan? A budget is the approved financial plan for a defined period and creates a baseline for accountability. A forecast is an updated estimate of expected results using current information, so it can change during the year. A long-range plan looks several years ahead and focuses on strategic capacity, investment, funding, and operating needs. At Con Edison, all three would work together. The budget manages near-term execution, the forecast highlights emerging risks, and the long-range plan supports infrastructure decisions. Focus on purpose, timing, flexibility, level of detail, and ownership. Explain how each tool supports different decisions, especially annual execution versus rolling outlooks and multi-year infrastructure planning. Question 6. How would you analyze a significant unfavorable O&M variance? I would first confirm the variance is real by reconciling the report to the ledger and checking accruals, coding, and timing. Then I would decompose it by department, vendor, labor, materials, and other categories, comparing actual activity with budget assumptions. I would speak with the responsible manager to determine whether the cause is one-time, recurring, or a timing difference. My final analysis would quantify the forecast impact, recommend corrective action, and clearly communicate risks to management. In your answer, describe validating the data, decomposing the variance by category and timing, distinguishing one-time from recurring items, engaging owners, identifying corrective actions, and updating the forecast. Question 7. How do weather and seasonality affect utility financial planning? Weather affects both demand and operating costs. Hot summers can increase electricity usage, while cold winters can raise gas demand and related service activity. Storms may create unplanned restoration and maintenance costs. I would compare actual degree days with normal conditions, quantify the financial sensitivity, and avoid treating weather-driven movements as permanent trends. For planning, I would use normalized assumptions and scenario analysis, then explain the difference between weather impacts and underlying customer or operational performance. Mention heating and cooling demand, degree days, storm costs, normalized weather assumptions, revenue and expense sensitivity, historical comparisons, and scenario analysis for unusually warm, cold, or severe conditions. Question 8. What is variance analysis, and how would you present it to senior management? Variance analysis explains why actual performance differs from budget, forecast, or prior year. I would organize the discussion around material drivers, such as volume, rates, labor, timing, weather, project delays, or one-time events. For senior management, I would use a concise bridge or dashboard showing the dollar impact, percentage change, owner, and forecast implication. I would distinguish controllable from uncontrollable items and finish with recommended actions, not just a description of what already happened. Cover actual versus plan comparison, root cause attribution, materiality, favorable and unfavorable drivers, concise visuals, forward-looking implications, and recommended actions rather than merely reporting historical differences. Question 9. How would you evaluate a large capital project from an FP&A perspective? I would assess the project's approved scope, total estimated cost, spending schedule, funding requirements, and expected operational or regulatory benefits. Monthly, I would compare incurred and committed costs with the project budget, investigate changes in milestones, and update the estimate at completion. I would also monitor cash flow and distinguish timing shifts from true overruns. Because utility projects can span years, I would document assumptions carefully and escalate scope, permitting, procurement, or execution risks early. Make sure to address approved scope, cost estimates, timing, cash flow, project milestones, committed versus incurred costs, benefits, risks, and coordination with engineering, procurement, accounting, and regulatory stakeholders. Question 10. What is the difference between capital expenditures and operating expenses? Capital expenditures create or improve a long-lived asset and are generally recorded on the balance sheet, then recognized through depreciation over the asset's useful life. Operating expenses support current period operations and are expensed as incurred. The distinction affects earnings timing, cash planning, asset balances, and performance metrics. At Con Edison, accurate classification is especially important because infrastructure investment is significant and may interact with regulatory recovery. I would always follow accounting policy and consult controllership when facts are unclear. Explain the accounting distinction, capitalization criteria, depreciation, period expense recognition, budget implications, and why accurate classification matters for utility investment analysis and regulatory reporting. Question 11. How would you build a monthly management reporting package? I would start by confirming the reporting calendar, source systems, definitions, and materiality thresholds. The package would include an executive summary, income statement views, cash or capital updates, key operating metrics, and concise explanations of material variances. I would use consistent templates and visual trends so recurring issues are easy to identify. Before distribution, I would reconcile totals to accounting records, obtain owner commentary, review unusual movements, and tailor the level of detail to each audience. Discuss data validation, standardized metrics, actuals versus budget and forecast, executive summaries, operating drivers, variance commentary, trend analysis, deadlines, and tailoring detail for different management audiences. Question 12. Tell me about a time you found an error in financial data. In a prior reporting process, I noticed a department's expense increase was inconsistent with its activity levels. I traced the amount to a duplicated vendor accrual caused by a mapping issue between source files. I reconciled the transactions, quantified the effect, and discussed the correction with accounting and the budget owner before updating the report. I also added a duplicate check and variance threshold to the process. That experience reinforced the importance of questioning results rather than accepting an automated output. Use a concise star example showing how you identified the issue, tested the source, quantified the impact, involved the right stakeholders, corrected the report, and improved the process or control afterward. Question 13. Which Excel tools would you use in an FP&A role? I would use SumIfs, XLOOKUP, index match, logical formulas, pivot tables, and charts for recurring analysis. For larger or repetitive datasets, I would use Power Query or structured tables to improve consistency and reduce manual work. I also build checks for missing data, duplicate records, balance differences, and unexpected movements. When presenting a model, I separate inputs, calculations, and outputs, label assumptions clearly, and keep formulas auditable so another analyst can review or update it efficiently. Mention pivot tables, XLOOKUP or index match, SumIfs, logical formulas, data validation, charts, scenario analysis, Power Query, error checks, and model transparency without overstating technical proficiency. Question 14. How would you improve a repetitive FP&A reporting process? I would map the process from source data through final distribution and identify manual steps, duplicate work, and control risks. I might standardize file formats, use a controlled template, automate data preparation, and add reconciliations before the final output. I would test the new process against prior periods and have a reviewer validate results before implementation. The goal is not automation alone. It is faster, more accurate reporting with clear ownership, documentation, and an audit trail. Cover documenting the current process, identifying manual bottlenecks, standardizing inputs, automating appropriate steps, preserving review controls, testing outputs, measuring time savings, and obtaining stakeholder acceptance. Question 15. How would you handle conflicting assumptions from different business departments? I would first clarify whether the disagreement concerns definitions, timing, scope, or the underlying business outlook. Then I would compare each assumption with historical data, contracts, project schedules, operational plans, and other available evidence. I would document the alternatives and quantify the financial effect rather than choosing informally. If uncertainty remained, I would present a base case and scenarios to the decision maker, explain the risks, and obtain documented approval for the assumption used in the forecast. Emphasize clarifying definitions, tracing assumptions to evidence, understanding operational ownership, documenting differences, using scenarios when needed, escalating material conflicts, and reaching a transparent, supportable conclusion. Question 16. How would you assess the impact of a delayed infrastructure project on the forecast? I would identify which milestones moved and separate delayed spending from costs that remain committed. Then I would update the capital schedule, cash flow, depreciation start date, financing needs, and any expected operating or regulatory benefits. I would quantify the current year and multi-year effects and test whether the delay creates additional procurement, permitting, or execution risk. Finally, I would align the revised assumptions with the project team, accounting, treasury, and leadership before incorporating them into the forecast. Discuss revised milestone timing, spending shifts, depreciation, cash flow, financing, operational benefits, regulatory implications, committed costs, risk exposure, and communication with project and finance stakeholders. Question 17. What financial and operational KPIs would you monitor at Con Edison? I would monitor revenue, O&M, EBITDA or operating income, capital spending, cash flow, forecast accuracy, and budget utilization. I would pair those financial measures with customer demand, outage and reliability indicators, safety performance, workforce levels, project milestones, and service quality metrics. The right dashboard should show relationships, such as whether higher maintenance spending improves reliability or whether project delays affect capital utilization. I would prioritize actionable KPIs with clear owners rather than presenting an overcrowded list. Include revenue and O&M performance, capital spending, cash flow, customer demand, reliability, outage measures, safety, workforce, project execution, and regulatory metrics, while linking KPIs to controllable decisions. Question 18. How would you approach scenario analysis for a major planning assumption? I would identify the assumption with the greatest uncertainty or financial sensitivity, such as demand, weather, labor costs, commodity prices, or project timing. I would establish a supportable base case and create upside and downside cases with clearly documented changes. The model would show effects on revenue, expenses, cash flow, capital needs, and relevant KPIs. I would highlight decision thresholds and mitigation actions, so management understands not only the range of outcomes but also how to respond. Explain selecting the key driver, defining base, upside, and downside cases, changing only supported assumptions, quantifying income and cash effects, identifying thresholds, and using scenarios to guide management decisions. Question 19. How do you ensure accuracy and integrity in financial reporting? I ensure accuracy by validating source data, reconciling totals to the general ledger, reviewing unusual movements, and documenting assumptions and changes. I use controlled versions, clear file naming, and independent checks for important calculations. I also confirm that operational owners support the commentary and that accounting treatment follows policy. If someone asked me to omit an unfavorable result or use an unsupported assumption, I would raise the concern professionally and escalate through the appropriate channels. Mention reconciliations, source validation, documented assumptions, segregation of duties, review controls, version management, variance checks, confidentiality, and willingness to escalate unsupported or misleading information. Question 20. What would you do during your first 90 days as a Con Edison FP&A analyst? During my first month, I would learn the business structure, reporting calendar, systems, accounting policies, regulatory context, and key operating drivers. In the second month, I would own recurring reports with careful review, meet business partners, and document assumptions and data flows. By the third month, I would seek a practical improvement, such as automating a reconciliation or strengthening variance commentary. I would ask for feedback throughout, prioritize accuracy first, and gradually expand my independent responsibilities. Outline learning the business and systems, understanding reporting calendars and regulatory context, building stakeholder relationships, validating recurring deliverables, delivering an early process improvement, and seeking feedback continuously. If you are still with us, congratulations! You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.